volatility, right? Volatility means up and down. And oddly enough, the week ended more up than not. And it was really surprising given all the geopolitical events from the past week.
Right. For the week, the S&P was up roughly 0.5%. The NASDAQ up almost 1%, small caps as well. And the 10-year, which at one point got as low as 1.8%, closed the week at 2%. So a big recovery in the Treasury bond yields as well.
A lot of movement in interest rates, certainly. And, we've been talking about interest rates rising for a while, so we'll need to unpack that a little bit in terms of, how the developments might impact how the Fed perceives inflation risk, and those sorts of things. But let's just talk a little bit about, why do we see, the market actually rallied over the last couple of days and given the news in the Russia-Ukraine incidents?
Well, last week, Dave and I were talking on this show about how negative sentiment had become. The institutional investors were very negative. The retail public was very negative. People were very concerned that the Russian army was gathered at the border of Ukraine. So the other night when they actually did invade, despite what Putin had said, the markets initially sold off 850 Dow points and then sat there all night long as we started to hear about what was going on in the war zone. And then immediately after the market opened, buyers showed up, and that really just goes back to that old adage: you get defensive during the buildup, but you buy when you hear the cannons go off. And while that sounds like a simplistic notion, markets are discounting mechanisms. Markets see the end of the war, not the beginning, and they're advanced discounting that.
And let's talk a little bit just about the Russian economy, the impact of this war on the U.S. economy. Where do we see most of those risks?
Well, it's exacerbating the problem the Fed is going to have. I mean, Ukraine is a major exporter of wheat. That's a major foodstuff. Wheat prices have been going up dramatically in the past year. In addition, Russia is the third largest producer of oil, the second largest producer of natural gas. So if anything happens that could interrupt those supplies, that could cause energy prices to go even higher. We saw oil prices at one point this week tagged $100 a barrel. And this is already on top of the inflationary concerns our Federal Reserve sees as they prepare to meet in the middle of March and potentially hike rates for the first time since the pandemic.
So one of the risks then is that this actually exacerbates the inflation risk here in the U.S.
It could. I mean, we're somewhat insulated from what goes on in Russia. They do most of their business with Europe, so as does Ukraine. But it's certainly the ECB has the same issues we do here. And I think you could look, at the glass is half full and say, well, the uncertainty that's been created by what's going on in Ukraine, Putin, saber rattling, challenging Finland and Sweden on Friday, for example, and where that came from, I have no idea. But in an environment like that, the Fed might, be a little bit more gingerly at raising rates. So talk of a 50 basis point rate hike in March is kind of diminished a lot. So perhaps a 25 basis point cut, but that at least gets us on the road towards some level of normalcy.
So as market participants are digesting that, perhaps one of the reasons that we see, that the market rallied a little bit is less concern about the aggressiveness of federal rate hikes, because they certainly wouldn't want to induce a recessionary environment right here in the middle, of this geopolitical environment.
Yeah, I think that's part and parcel true. And also, literally, some of these stocks, I mean, we talk about the S&P all the time. On Thursday at the opening, the S&P actually was in correction territory for the first time since March of 2020. It had been long overdue. We've talked about that any number of times in the past year or so, that last year's drawdown of 5.4 was very unusual in terms of its lack of downside volatility. So people got caught. They got complacent. We finally had a correction. They happen once every 11 months on average. We do not believe we're about to go into a recession, which is what you would really worry about to trigger a bear market type reaction. So it certainly was viewed by many as a buying opportunity with the economy still on solid footing and the Fed not even being tight yet.